Welcome to Invest in the Family Radio, a podcast about learning to invest. My name is Brian Bain, and I'm your host. At Invest in the Family Radio, we believe that every dollar and minute we spend is an investment in something, and together, we want to make the best investments that we can. So thank you so much for joining us. And on today's show, we actually have Bret Jensen back, and we're going to spend time talking a little bit about biotech, but mostly we're going to spend time talking about his overall views in the market and also what's getting him excited in the area of insider buying. So a little bit of biotech here, but also a few other industries as well, including housing, to name a few. Quick overview, we're going to say, according to Bret, what are the chances of a rate hike this week, this September 2016? When should we expect the next Fed interest rate hike? What's holding the Fed back? Hint, the ECB and the Bank of Japan. And what the Fed should have done years ago, and what Bret sees as the two most undervalued segments of the market right now, why he likes housing as an investment, and what are the two housing companies with the most notable insider buying he sees potential in right now, two biotech companies with lots of insider buying, and one looking for acquisition opportunities. Then in conclusion, what are some tips that Bret has on how investors like you and me can make the most out of insider activity? So as always, we have a great show in store with Bret. And again, if you want detailed show notes with all the highlights typed up from today's show, you can text the word family notes. That's one word, family notes, the number 44222, or simply go to investinthefamily.com and sign up at the website there. We'll be sure to get those notes to you. And remember, our goal is to help you learn to invest financially and in all of life. You can always find more at investinthefamily.com and subscribe to the show on iTunes and the Google Play Store. Have you ever wanted a cheat sheet for investing, a legal way to access information that the general public doesn't know about? Believe it or not, you can. How? By following the purchases of company insiders. The bad news is that this info alone is not enough. There's still plenty of more work to do. Enter Bret Jensen and the Insiders Forum on Seeking Alpha. This is Bret's newest service where he follows the actions of company insiders and then dives deep to find the best opportunities. If you'd like to invest with Bret, visit insidersforumsa.com for more information. That's insidersforumsa.com, SA as in Seeking Alpha, insidersforumsa.com. And I hope you enjoyed today's interview with Bret Jensen. Well, hey, Bret, welcome back to the show.
Hey, Brian, thanks for having me back.
Always great to have you here. And today's going to be fun. Like we typically, when we're together, we always talk about biotech, and that's obviously a great field of expertise for you. But today I want to do something a little bit different, and I want to kick it off by just hearing you share a little bit about your overall views of the market right now and kind of what you're seeing happening and how you're responding.
Yeah, great. Right now, the market has had a spike of volatility. July and August, we had over 40 straight days where the S&P 500 didn't move up or down 1%. And then after Labor Day, we had like 4 straight days where it moved up or down 1%, a couple moves above 2%. And we've kind of settled down again. We've got the Fed meeting tomorrow. They'll be released. We kind of panicked on September 9th when we went down about 3% because we had some hawkish comments. And then the following Monday, we went up 3% because we had some dovish comments from a different Fed governor. My personal feeling is that the chances of a rate hike tomorrow, 25-30% they do. Probably they won't. I just can't see Chairwoman Yellen wanting to hike rates right before a close election. So I think they'll continue to jawbone instead of take action. So they'll go ahead and put off raising rates until December. But instead of 1%, you might see 2 or 3. And if we do get a rate hike in December, that's probably going to be the only one we're going to have for the next couple quarters. It's just very hard for the Federal Reserve to justify consistently rising rates with the economy that's only grown 1% over the last 3 quarters on average. It should do over 2% in the last half of the year, but it's still very sluggish growth. There isn't that much wage pressure. We've had some uptick, but in the scheme of things, it's not that severe. And as importantly, the European and the Japanese central banks are pursuing negative interest rate policies. So the Fed hikes rates by more than a quarter point. While that's still going on, that's really going to boost the dollar, which has all sorts of impacts, none of which I think the Fed wants to have. So even though I think the market is slightly overbought here, I just don't fear the Fed as much as some investors do right here.
Well, and with what the ECB or the European Central Bank and the Bank of Japan are doing with their negative rates, I mean, how much freedom does you hit on this a little bit, but how much freedom does the Fed actually even have, even if the economy was stronger because of the dollar expectations, like you mentioned?
Yeah, they're really kind of in a corner. I mean, you can almost feel for them. They probably should have raised rates in 2014 or 2013 when the economy was a little bit stronger than it is now, and the other central banks weren't pursuing these negative interest rate policies. The lack of coordination among the major global central banks, now how do you get out? You have over $4 trillion balance sheet, and your counterparts are expanding their balance sheets, and the dollar's already gone up a lot over the last year and a half, which is one reason the S&P 500 earnings have declined for 5 straight quarters year over year. So they're kind of pinned in a corner here.
How realistic do you think it is that we have rates at current levels, or maybe vary by 0.25% or so, for the foreseeable future, for years to come, because of everything you just described?
Yeah, I mean, at some point we're going to have to raise rates. But we've been saying this for 5 or 6 years now, and it's kind of hard to see a scenario where they're going to have to raise rates on a consistent basis unless we have a huge uptick in both domestic and global growth, and it's really hard to see what is going to trigger that. So I think that, when it does happen, it's probably going to be because of unforeseen events, and it's not going to be a good thing. But is this going to happen in the next 12 months? It's kind of hard to see what would cause that.
What are the consequences of rates not rising for the next few years?
Well, the one thing that really is ironic and very bad for the economy, and one of the reasons we have such sluggish growth, is this is terrible for bank profits.
Sure.
Because, the banks rely on the net interest rate margin. When you have rates this low, that component of earnings go away. Obviously, they've had a lot more regulatory costs. And this is one reason, along with all the, the risk management changes, both in the internal company and by regulators, why you're not seeing a great deal of monetary velocity, not a whole lot of lending out there. And companies are reticent to take additional lending. I mean, look at what they're using the cash flow for: stock buybacks.
Right. Yeah, still not a lot of capital investment going on.
No, business investment has been really, really just above stall speed for a couple of years now. No one's really taking much risk on the corporate side of things. It's just easier to go ahead and either hike your dividend or add money to your buyback. I'm watching the screen. Microsoft hikes dividend and adds $40 billion to their buyback plan.
Right. Well, what do you think? It's almost like everyone's kind of daring someone else to move first. People want companies that invest in capital investment more to help boost the economy, but then people are waiting for the Fed to raise rates. It's like everyone's waiting for someone else to make a move. And you mentioned a while ago that it's possible that the move may be forced on all of us at some point because something happens that, we're not expecting. But yeah, it'll be interesting to see kind of who gives first, I guess.
Yeah, exactly. I think we're just going to continue to mire along in a very slow growth for the foreseeable future.
Well, another area you've been spending or focusing maybe a little bit more time on of late has been the activity of insiders. Can you tell us a little bit about what you're seeing there and how investors can take advantage of opportunities there?
Yeah, it's very interesting. One of the reasons I do think we have an overbought market is there's very little insider buying right now. It's down, I think of August, I saw a note on Market Watch, it was down like 55% from the same time a year ago. Consequently, what the insiders are buying, especially in the small and mid cap arena, has interest to me because this kind of points to some of the few undervalued parts of the market. And I have noticed that the insiders are buying a lot of housing plays and a lot of the small biotech plays, which correlates to my view that these are two areas of the market that are undervalued for different reasons. The housing market, because we've had 10 years now where housing starts have been much under the 30 to 40 year average. Interest rates are historically low. You have solid, not great job growth, but you have solid job market. And household formation is back above where it was before the financial crisis. So you have all this pent-up demand. And we've had a couple good years as far as improvement in the housing market. 2015 was the best year for housing starts since 2007. And this year is going to beat last year. Now it's been a very, two steps forward, one step back type of housing recovery. I mean, on Monday, you had home building sentiment at the highs of the cycle. It jumped in the West by 14 points, the highest level it's been since October 2005. And then today, the housing starts slightly disappointed. And, so it's kind of like we'll go where the trend is up, but it's not a straight upward trajectory. And what is interesting with the S&P 500 producing no earnings growth, the home builders are seeing some solid earnings, both on the revenue and the earnings side, and they're selling at a big discount to the overall market multiple. On top of that, you have some, insiders or make some purchases in this area, and one of the few that I'm seeing purchases recently, and that includes construction and infrastructure stocks. The first stock we put in the insiders forum was a company called Sterling Construction, and it's up about 40% since that went in June. And the tip-off there was that their CEO bought $500,000 worth of stock on May 4th. It was his first insider buy in quite some time. And then that kind of tipped us off to go ahead and take a look at the company, which basically builds, repairs, and reconstructs transportation infrastructure such as highways, roads, bridges, airfields. Now, like most outfits in that sector, they got in trouble during the financial crisis and the aftermath because they kind of needed work, so they underbid all these big projects. It took 3 to 4 years to play out. And they ended up making no money on them. The management was bad. They brought in new management, and they've been working off all the long-lived projects that basically have no margin, and they begin new orders at a higher price point now that the economy is improved. Congress passed a 5-year transportation bill late last year, and their margins are going up. They've gone from just under 5 when we recommended them to 7. They still should have upside because this is going to be a multiple year thing where they work out the old projects they're making no profits on and start completing the ones they are. D.A. Davidson just put a $9 stock price on it, and the ticker symbol on that is STRL. It's a small $170 million market cap company. We're also seeing some buying on a new position in the Insiders Forum holdings called Beazer Homes. Now, Beazer, kind of the same survival mode as Sterling was back after the financial crisis. Unfortunately, their balance sheet wasn't as well managed prior to the housing bust as some of their larger rivals, such as Lennar and Toll Brothers. So they couldn't take advantage of the low lot prices that prevailed right after the financial crisis. So they're priced at a big discount, both on a book value and a price to sales to the larger home builders. And they're seeing some good sales gain, number one. They're also restructuring their balance sheet. So this is another margin improvement story that should play out in many years. And what really gives us a little more confidence in that, we've had several insiders make some significant purchases over the last couple of months. Symbol on that is BZH. Moving a little bit to biotech, last time we talked about merger and acquisition activity. And one of the companies I mentioned that was likely to be a very aggressive acquirer was Allergan. Who was going to tie up with Pfizer in a $150 billion merger that got derailed by the Treasury Department. And one of the results of that is both companies had to go to smaller acquisitions to go ahead and replenish their pipelines. Pfizer's already made about $20 billion worth of acquisitions over the past past few months. Allergan just completed a $40 billion sale of their generics business, Teva Pharmaceuticals. So now they got cash on hand, and they are being very aggressive. They bought Biotech Pharmaceuticals last week for like 150% premium, a little over $600 million to get in the dermatology space or expand their footprint into it. Today, they bought a small NASH a company, Tobera, very small, but they paid over 600% premium to do so. So you're seeing some pickup with M&A activity. And what we've seen over the last couple of months, actually last couple of quarters, as biotech went into the largest bear market has been since 2008, from the summer of last year to about the end of the first quarter of this year, we've seen some significant insider buying. One of the stocks that we recommended on August 21st is a company called AERI Pharmaceuticals, AERI. Now, I wouldn't be chasing this because since we recommended it, it's up just over 100%. They did their first NDA on September 6th. They're a small ocular concern. And then a couple of days later, they announced much better than expected results from a phase 3 trial. They posted another 12% gain today. Two stocks that we also like that haven't run up, that have insider buying, are two very, very similar ticker symbols. One is ADMA Biologics, and they had a problem with their product they're trying to get to market called R1002. This is a small company, about $100 million, a little less than that. But the complete response letter, the STRL from the FDA, was around manufacturing issues, not the drug itself. They did a secondary to go ahead and support the rollout of that product for about $14 million in May. And impressively, insiders bought $1.6 million of that secondary. This is selling much lower than a lot of the analyst price targets. It's selling for about $11. Selling about $7. Most of the analysts are in the mid-teens on this. I think they get that CRL resolved, and this goes higher. Another stock that we just put in the insiders forum portfolio is Adamas Pharmaceuticals. Now, the ticker symbol on the previous ADMA is ADMA, and this one is ADMS. Very, very coincidence. But one of the things we like about Adamas is the director and a beneficial owner picked up like $3 million worth of new shares in a couple of transactions since early in this month. Now, they have two products on the market that they go ahead and market through a larger drug giant, Allergan again. And they will start, they got big upfront payments on that, but they won't start earning royalties on the sales to 2018 on one product and 2020 on another. They also have a wholly owned compound in development that should be filed for approval sometime next year. Now, this is a drug that treats some of the complications from the main drug used to treat Parkinson's, which affects about 1 million people a year in the United States with 60,000 new cases. So it has a very big target market, and it seems like it's going to go ahead and be approved next year. Now, this is a very small company with about a $18 price level right now. We've seen some analysts go up to 38 on it right now. Wow. This is another one. If Allergan is going to make another purchase, they already have the partnership and they're going to own all royalties on this one. If they want to get into the neurology space, this would be a good acquisition from them. Regardless, I think this goes higher. Obviously, a director has made a huge bet that the stock is undervalued, and it's rose nicely since we bought it, but it still seems like it has really solid upside here, especially if M&A activity continues to perk up in the small biotech space. So those are 5 names in housing and biotech that we've seen significant insider buying on one, and still looks like the stocks have room to run.
Well, tell me this. Like, this is fantastic, and I mean, it's always love getting specifics because it's nice having actionable information, and you've given a lot of that. But one thing I'm curious about is, when you hear about insider buying and selling, I feel like a lot of people can get excited positively or negatively about selling or buying from insiders, but not really know how to make sense of that. And a lot of times people can interpret it incorrectly and make bad decisions in light of that. Do you have any advice or wisdom for people as far as how to best make sense of insider moves, or how you do that maybe?
Oh, absolutely. Insider selling is less of a sign simply because insiders sell for a lot of different reasons. Option or stock grants or expiring, tax purposes, diversification, upcoming divorce. There are all sorts of reasons insiders sell. I only really get concerned. A lot of people say, well, someone sold $1 million of insider stock. Well, how much stock they own? Well, 100 million. That really isn't a sign. Now, if someone sells 1 million and that's their entire stake in the firm, okay, that's probably, I would consider that a little more serious. On the flip side, as Peter Lynch always used to say, there's only one reason insiders buy, and that's because they think the stock's undervalued. And I always find this a really good tip-off, especially in more of the undercovered, underfollowed, small and mid-cap spaces. I mean, some of the insiders on like the huge firms, a CEO that's making $20 million a year, okay, and the stock's gone down, and he'll go ahead and show a vote of confidence by putting $250,000 in new purchases. That's not a big thing. But when a CEO that is only making $500,000 or $600,000 a year at one of these small caps puts $500,000 to buy insider stock, okay, that's probably a bigger tell that he really, really believes that stock is undervalued, knowing what's going on in the company.
Sure. Yeah, so a lot of it, it's like many things. When you see insider moves, it may be a good thing, maybe a bad thing. To make a decision just based upon insider buying or selling, it's not really a wise way to go. But once you see that happen, you can dig kind of behind the scenes and hopefully get a better feel for why they're doing that, and then decide whether or not it speaks to you as whether or not it's actionable.
Right. It actually kind of flags the opportunity. You still have to do due diligence. You still have to go ahead and look at what the upcoming milestones for the company are, what the valuation is. But if the stock, after analysis, looks undervalued and you have insider buying, I feel a lot better about that stock than if the insider buying isn't there.
Sure. Absolutely. Well, Bret, it's always great to have you on the show, and I appreciate you giving us some of your time this afternoon.
Brian, always happy to appear here. Thank you very much for having me.
Well, I hope you enjoyed today's interview with Bret Jensen. Remember, you can get full show notes with links and other details at investinthefamily.com. Don't forget to subscribe at iTunes, Stitcher, or the Google Play Store. And if you want to receive my summary sheet, the detailed notes of today's show, simply text the word Family Notes, one word Family Notes, the number 44222, or visit investinthefamily.com and sign up, and we'll make sure to get you taken care of. This is Brian, and thanks for joining the family. The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.